Picture this. You hear about a stock that's skyrocketing, and despite having no prior knowledge about the company, you hastily buy shares, afraid of missing out on potential profits. This scenario is a classic example of FOMO, fear of missing out, a psychological phenomenon that's becoming increasingly prevalent in the Indian stock market. FOMO is a powerful driver, pushing investors to make snap decisions, often leading to financial loss. Let's consider a recent event. A relatively unknown and unproven company saw its stock price surge. The buzz generated a buying frenzy as investors driven by FOMO scrambled to get a piece of the action. But alas, the bubble burst and the price plummeted, leaving many to rue their impulsive decisions. The takeaway? FOMO can be a treacherous guide in the complex world of stock market investing. Making hasty decisions based on others' actions can often lead to regret, a key symptom of the FOMO phenomenon. Now, let's consider the repercussions of FOMO on retail investors. The fear of missing out can cloud judgment and lead to hasty decisions. Retail investors in the grip of FOMO may overlook crucial financial indicators, ignore red flags, and dive headfirst into risky investments. Let's take an example. Imagine a retail investor propelled by the fear of missing out who invested a considerable sum in a highly hyped stock. All the signs were there: overvaluation, insider selling, and negative cash flow. But driven by FOMO, our investor ignored these warnings, hoping to ride the wave of quick profits. Unfortunately, when the bubble burst, they were left with nothing but regret and a significant financial loss. This scenario is not uncommon in the volatile world of investing. FOMO can have serious consequences, often leaving retail investors with significant financial losses. So, how can you prevent FOMO from impacting your investment decisions? Firstly, arm yourself with knowledge. Do thorough research before diving headfirst into investments. Understand the company, industry, and market trends. Knowledge is power, and in this case, it's your shield against FOMO. Secondly, set clear financial goals. Don't chase market trends or let the success of others sway your decisions. Tailor your investment strategies to meet your unique financial goals and risk tolerance. Thirdly, resist the allure of hype and peer pressure. Just because everyone else is investing doesn't mean you should too. Sometimes the path less trodden is the right one for you. Fourthly, adopt a disciplined investment approach. Regular, systematic investments can yield better results over time than sporadic, impulsive ones. Lastly, don't hesitate to seek professional advice. Financial advisors can provide valuable insights and help you navigate the market with confidence. Remember, investing isn't about following the crowd. It's about making informed decisions that align with your financial goals. Overcoming FOMO is a crucial step towards becoming a successful investor.